Assalamualaikum warahmatullahi wabarakatuh, and good afternoon. Perfect timing to talk about risk in the afternoon. I can see the crowd is getting smaller and smaller, I suppose. So I'm just going to walk you through, from my perspective of how we manage risk in Takaful industry. Let me just introduce myself. I'm the Chief Marketing Officer of Prudential based in Takaful. I've been working in the Takaful industry for the last 15 odd years actually, including some conventional as well, 18 actually. In my first career, I was basically in actuarial division, doing all the technical stuff, some sexy stuff there, pricing, development. And in later years of my career, I'm more focusing on the product development, product marketing. So I'm not saying that I know everything when it comes to Takaful, but I can just share with you my perspective of how risk is being managed in Takaful. In fact, if you look at Takaful itself, Takaful is a tool for managing risk. It's just that the risk here is being managed in an Islamic way. Because if you look at life insurance, I'm just going to be focusing on family Takaful here because Takaful industry is very wide. You talk about general, you talk about life. My experience is very much focusing on family, which is equivalent to life insurance industry. So, because life and general, they have different sets of risks, which we need to understand. So today, I'm just going to share with you my perspective of how life or family Takaful works and what kind of risks that we face on a day-to-day basis in our jobs. I just got 2 slides, don't worry. So I think let's just have an interactive session. If I can answer your questions, I'll be happy to. I'm just going to be focusing only on product, the perspective of risk in product within the Takaful, family Takaful industry. If you look at the Malaysian Takaful industry today, for family Takaful, when Bank Negara opened up more licenses in 2006. Takaful industry has been around in Malaysia for the last 30 years. Then when Bank Negara opened up more license in 2006, we've got about extra 6 players, and then they opened up again in 2010, only for family Takaful license. So now we have about 9 or 10, 11 market players, direct. And Prudential based in Takaful is just one of them. Okay, and there are some companies which are just focusing on banker Takaful, which means that they are distributing the product via banks only. And there are companies which are focusing on agency model, which means that they are selling the product via agency force. The reason I'm telling you all this is because these 2 sets of companies have different risk appetite. If you look at, for example, most companies which are distributing their product through banks, their risk appetite is very much focusing on credit. Credit-related product means like mortgage, personal financing, group. Those are the simple products. Okay, managing those risks is different from managing, for example, for a company which are focusing on distributing the product via agency. Take, for example, Prudential, or even some other Takaful players, AIA, MAA. We are big players in medical. Medical carries different types of risks altogether. Medical, as you know, is very tricky to manage because if you look at the risks, we call it morbidity. In insurance or in life insurance, mortality, we talk about mortality, we talk about the risk of death. We talk about morbidity. Morbidity is a risk of people falling sickness, people falling sick. Okay, and we talk about longevity risk as well. Longevity risk, we talk about how long can we expect a person to live. All these risks is basically will determine the type of products that you can come up with. For example, in Malaysia, you will not find a true annuity product. Okay, a true retirement product like pension, for example. If you want to offer a pension product, one of the key risks that you need to consider is the longevity risk. Longevity risk means you don't know how long a person can live. And you need, from a practitioner perspective, as we develop this product, we have to ensure the assets and the liability match all the time. One of the key challenges in coming out with that kind of product, annuity product, is capital market, is sukuk. We don't have enough sukuk to support the liabilities of this kind of product. That's the reason why, if you look at my first slide here, the first point is about product portfolio. What kind of products do we offer in the market? Right now, for family Takaful, most of the companies are offering investment link, credit, or savings product. You won't find annuity, life annuity, or pension product. You will not find. Though there are some products which they claim, or it is claimed to be fulfilling your retirement, but that is very much on the fund side, not really a life annuity, which is paying your pension until the person dies. So, forgive me for diving straight into a product perspective of risk, actually. If I take a step back, just now I just said that the difference between life insurance and Takaful is, Takaful, we managing risk Islamically. The method of managing the risk here is via the Tabarruk Fund. I think most of the INCEIF students here, I think you would have familiar with the concept of Tabarruk. The Tabarruk is basically is a sharing of risk. But if you look at the life insurance, it's a transfer of risk. Because a person buying life insurance, they are transferring the risk to the company. But the person who participate in Takaful, they are sharing the risk. So that is in a nutshell of Takaful. But coming back to what we face as a practitioner, the challenges that we face today is very much of coming up with the right product, fulfilling the market needs. If I were to share with you the current experience that we have, majority, the main driver in the Takaful industry today in Malaysia for family Takaful is a medical product. Everybody wants to have a medical plan. So that is easy to sell. But what market do not understand, medical product pose quite a bit of a risk, actually, if it is not managed correctly. Because the way you design a product may lead to people, sometimes may lead to people abuse it. On one side, you have a risk to manage, the Tabarruk Fund. Everyone contributes in order to pay the claims. I hope you can try to visualize this. As an actuary, they will calculate the probability of the incidents that would happen. Incidents here, people going in and out of the falling sick, that kind of things. Medical, sometimes if you design the product not in a correct way, it will attract, we call it anti-selection, it will attract unnecessary risks here. Because people who are even not supposed to be hospitalized may just go into the hospital and make claims. So the types of products that we offer in the market it is a challenge. That's the reason why some companies do not want to offer medical product. To be on the safe side, they just offer credit-related product, mortgage, personal financing, like I said just now, or even you can just offer investment-linked product, which is a combination of unit trust and life insurance bundled into one. It's easier to manage the risk because mortality risk is easier to manage compared to morbidity risk. I hope people can really understand what I'm trying to say here. You see, so as for big players, right, AIA, GE, Prudential, and even MAE, for example, we are more into medical plan. So the way we manage the risk is different from those players who are in the banker Takaful space. It's totally different. Okay? I talk about sustainability in pricing. If you are familiar with the Takaful plan or family Takaful plan, the pricing is never guaranteed. Whatever you buy today is not guaranteed that you're gonna pay the same contribution until the policy or the certificate matures. Nor Takaful companies at the moment can really guarantee that because of the risk. For example, if you talk about, just now I talked about medical risks. What about critical illness? Critical illness, we talk about heart attack. We talk about stroke. We talk about cancer. No Takaful players or no even Takaful players can guarantee the pricing of this kind of product because it's difficult. It is not easy for you to really cover the risk in the long term. So as a result, you will find in family Takaful products, there are no guarantees in terms of the pricing. The tabarruk rate is never guaranteed. The tabarruk is basically a risk charge. How much participant pay into the tabarruk fund would determine how much he would get if something happens to him. And this is a probability, and the actuaries will calculate all this, and nobody can guarantee that. So this is quite a very tricky part of managing the risk here. That is on the product side. If I were to share with you in the product side, because regulator market really, they are really asking for a genuine retirement product. We have PRS on the fund side, but do we have a genuine retirement plan? We don't. Like I said just now, the tricky part is because of the capital market may not be able to support it. It's all linked between capital market and the player. We can design a product, but we do not have the instruments to support that product. As a result, you cannot come up with a product in the end. That is just one part of the risk. That is product. I'm just going to talk broad about the risks that Takaful industry or Takaful players like us face on day-to-day basis. Second part is the changes of constant changes to the regulation. Just to share with you, in the life insurance and family Takaful space, we have gone through quite a few changes in terms of regulations. 3 years back, we have Takaful operational framework, which make sure that all the Takaful players are operating on a level playing field. When Takaful was set up in 1984, the first Shadaqah Takaful, the surplus distribution, when I talk about surplus, is coming from the tabarruk fund, yeah? After paying off all your claims, there's a surplus. That surplus is shared. And the sharing mechanism differ from one company to another company. Some companies pay 70-30, 70 to participant, 30 for them. Some companies pay 50-50. So when Takaful operational framework came in 2012, it changed the whole market to ensure that everyone can only pay up to 50-50. This has a lot of implications on the product itself, because all these changes will change the financial metrics, the financial profitability of the product. So that was TOF, Takaful Operational Framework. And then 2013, IFSA came about. And then, which is coming very, very soon, is a life framework, which is going to change the whole life insurance industry and Takaful. The players have to respond to it by changing the product structure again, which is going to be very tricky because let's just focus on Takaful. The contract in Takaful today, if you notice, if you study, is only wakalah and mudarabah. Tabarruk is given. Okay? Wakalah and mudarabah mainly is the only contracts applied in Takaful. You will not find wadi'ah, you will not find ijara, you will not find all the whatever is being applied in a banking side. Diminishing musyarakah, those things or tawaruk, you will not find it in Takaful. Takaful is mainly restricted to wakalah and mudarabah. And the wakalah fee is going to be regulated even further. As a result, the company have to manage the risk in terms of financial, because our exposure and our financial earnings or incomes will have to change. So we have to design a product differently. The point here, how do you relate it to risk? The risk here is because once you have a constant changes in regulations, you have to respond from the system perspective, from educating your distributors, you're changing your materials. All these are operational risks that we are taking on day to day. And let's talk about distribution, for example. I talked about medical just now. We got to be very careful here, because when we talk about medical plan or medical product from Takaful perspective, we are talking about Sharia compliant. But what about the behavior of the agents, behavior of the distributor? Are they really Sharia compliant? Are they really telling the market how the product works? Do they really disclose everything? Ben Negeri has done a good job. You know, you got PDS, you got a lot of disclosure. But at the end of the day, the reality is it depends on the intermediary, the distributor, whether they really explain to the market. So you have a risk here, because often what we found in our daily job, actually, we found that there are naughty agents, there are naughty distributors. How do we handle them? So these are some of the real risks, actually, because today we're talking about risks. So I'm just going to talk very broad about the risks. So these are some of the real risks faced by Takaful industry. I would love to focus a lot more on medical, because medical is the main driver for family Takaful in Malaysia. So if you want to understand the perspective of risks from family Takaful perspective, you can look at medical. Yes, we can talk about the actuarial side, like mortality. I'm not an actuary. Yeah, I graduated from in actuarial, but I'm not a qualified actuary. But the thing is, the risk is on mortality, risk on morbidity. Risk on morbidity is very tricky to manage. Okay? Because it has link to the market, it has link to the operation. I'll give you an example. Market risk. We talk about market risk today. We know ringgit is weakening, right? The inflation is going up, okay? It has impact to the Takaful industry because it has impact on the claims cost. I give you an example, medical again. Medicines, okay? They are imported, right? The cost is going up because of the ringgit is weakening. Indirectly, it will push the cost of claim going up. This is just another part of market risk that we face as practitioners. How do we manage it? Whether our pricing, we did a pricing, say, 5 years ago when we launched the product. Whether the pricing that we did 5 years ago can sustain for the next 20 years, or 15 years, or 20 years. So you face here is all linked from the product design, from the regulatory change, from the distribution perspective, how we sell the product to the market, and how the external factors like the market, how the market affect the product itself, is all linked from one to another. These are the real risks that we face as practitioners. I'm talking about here mis-selling. Mis-selling, you can just relate back to the product itself. Some products in the market offers you allowance if you stay in the hospital. Okay? Let me just share with you what the industry faces. You have a medical plan. The medical plan that gives you allowance as you stay in the hospital. The longer you stay in the hospital, the more money you make from participant perspective. And the more money you make, the more claims we pay. The allowance may be small, but the cost of hospitalization is really, really big. Coupled with the market risk just now, you are driving the whole claims experience going up exponentially. So these are the real risks. These are the risks that we face in medical. If you look at the credit-related product, for example, in Malaysia, credit-related product you pay once only. You pay one time, you cover for the next 25 years. You buy a house, you take a mortgage, right? Typically, the product would cover the insurance product or the Takaful product that cover the risk of the person dies is for the next 20 years or 25 years. You pay once. But how do you ensure that this one-time payment is enough to cover the risk for the next 25 years? So the trick here, I mean, the mechanism here is the pricing has to be really on the spot, man. It's not easy. I think moving forward, perhaps, if you have this kind of conference, talk about risk, I would suggest maybe we can get actuarial people, actuaries to talk about the financial risk from Takaful perspective. Today, I'm just going to talk really broad perspective of how risk, how we mitigate risk or how we identify risk. Another tricky parts that we face in the Takaful industry is the competent knowledge. I think this is everywhere, perhaps in Islamic finance itself. In Islamic finance, in Takaful, how many of us really understand Sharia? Some people just equate Takaful and insurance, they are the same. Just like profit and riba, they're the same. Loan and financing, they're the same. You would hear this. It is actually a risk. A risk to the image is one thing. But operationally, if the person who designed the product do not understand the mechanics behind, you may design a product that would lead to non-Sharia compliant. People may say that we have Sharia advisory board or Sharia committee, but some of the challenges that we face, whether the Sharia committee really understand the day-to-day working of what's happening at the back office. So this is really food for thought, I would say. The challenges between the Sharia committee and the practitioners, whether practitioners have explained everything and whether Sharia committee really understood everything. Then only you can come up with the right decision. The reason I'm saying this is because some of the products that we face, sometimes we practitioners question whether is it really Sharia compliant? Is the model correctly applied? You see, in Takaful, it's different from banking perhaps. You have a contract, in family Takaful, you have a long-term contract with your clients. If you buy a family Takaful plan for the next 25 years, say you are 30 now, the plan is supposed to mature at the age of 60, you have 30 years contract. And it's not easy for us to change the contract halfway. Yes, we have that provision, but it's not easy because you are changing the contract and you are basically the policy, they call it certificate holder or policy holder reasonable expectation. These are the things, these are big ones for practitioners to think of, because we really need to enhance the knowledge. We really need to do further research in Takaful. More often, what we heard today, the research in Islamic finance is a lot more on the banking side. That's the reason why I shared just now. Takaful, wakalah, mudarabah, tabarok. That's it. Nothing more than that. And people think that Takaful, there are not many issues. There are issues. There are issues. Well, the last part, I would say, the Sharia risk, like I said just now, the contracts, the tabarok, the design of the products, and these are the things. And I like to open to the floor if you have any questions on the risk from Takaful perspective, if I can answer those questions. Thank you very much.